Hey, what's going on? Blake here with Trade Tracer. As always, none of this is financial advice. Always trade and invest at your own risk. In this video, I'm going to help you get prepared for this week coming up. All right, so we have the S&P pulled up here on a daily time frame, and we are currently in a 2-day uptrend, closing at all-time highs. Now, one thing to note is this week is the week before OPEX, where oftentimes, not always, we see pivotal lows before the week of OPEX. So just keep an open mind. Be cautious up here. We have seen the NASDAQ put in new highs without MACD, so we're showing some bearish divergence on the NASDAQ. So if tech continues to lag, in my opinion, it's going to be difficult for the rest of the market to continue to break out. So keep a very close eye on this NASDAQ here. It looked like on Thursday we broke out and wanted to, rip higher. But, on Friday we just had kind of a doji candle, but still holding above this cloud. This doesn't really concern me until we come and break the trend, until we close inside of this cloud. If that happens, we would technically be putting in a double top without MACD confirming this price structure. So if that's the case, keep an open mind. Like I said, this is the week before OPEX, where oftentimes we do see pivotal lows before we head into the week of OPEX. Not predicting that, but I am staying open-minded for that scenario. Now, on the flip side, we are seeing the Dow Jones and the S&P show relative strength. So the Dow Jones finally did break out. The MACD is curling higher. So keep an eye out to see this rotation this week, maybe out of tech and potentially into the industrial. So keep that on your radar. Has been doing a lot of flip-flopping pretty much the past couple months. So keep a very close eye on what's happening intraday between the NASDAQ and the Dow. And of course, you always got to keep a close eye on the S&P 500. So I did mention, the Dow is breaking out. So what, what am I looking at to lead the Dow higher? Well, it's going to be banks. Banks, the previous leader, took a breather for quite some time, broke trend, broke below the 50 and the 10, consolidated, and now we're getting back above this cloud, which is just simply the 10 and the 50-day moving average. And on Friday, we gapped higher and then ran the rest of the day with MACD moving across this zero line. So I really like to see that. So this week, we're going to be keeping a very close eye on the banks and seeing if we continue to see that rotation into this sector. Some of the names that I like: Goldman Sachs breaking out to new highs, and Morgan Stanley is actually an ad for us. So we did have a trigger on Morgan Stanley, triggered for us on Thursday, Friday, ripped higher, and potentially will be setting up for an ad for us this week if you're not already long with us. Now, let's take a quick look at crypto. I want to kick it off with Ethereum, and I'm going to pull up some of our levels here. So I put these levels in here as indicators for me, kind of as a roadmap. And you can see, it's very much respected, these levels. We came up to this level, tagged it 4 days in a row, moved to the next level, tagged it, came back, let's back test this level. Okay, let's move higher to the next level. And it's really crazy how well it really respects these levels in here. Now, right now, we are just in a massive uptrend. We did have a trigger on this back at 2,200, moved all the way up to almost 3,200. So almost a 45-50% run if you took this trade with us. So already a home run trade, and now I'm just holding. I'm still extremely bullish Ethereum long term. Like I always say, it depends on your investment time horizon, what you're going to do with this up here. But right now, I'm still holding, and I'm a long-term investor in Ethereum. So Ethereum looks very, very strong. Same thing with Bitcoin, right? So I posted this chart on Twitter. Hey, right here, price strength confirmation, right around this 36,600 level, might be a good time to get in. Ran up to one of our levels, back test our next level, and let's make another run to the, we've broke out again. So the next resistance level above us is around this 47,000 level on Bitcoin. Right now, I wouldn't be surprised if we come back and just chop around for a little bit, but longer term, I do expect crypto towards the end of the year to make a move in a big way. No reason that this can't get back to 50,000 eventually. So I'm still very, very bullish Bitcoin, still very, very bullish Ethereum. All right, so let's take a quick glance at bonds. Like I said, bonds, I mentioned this island right here. Be very cautious with this island. Now we're breaking trend and back inside the cloud with no momentum. And if I pull up the 200-day moving average, we're probably pretty close to that 200-day would be my guess. Yep, so maybe come back test this 200-day moving average, see if that holds. Still not a great trade, long or short, just not a focus of ours, but you always got to keep a close eye on what's happening in the bond sector. All right, let's wrap it up really quick. S&P is leading. I'm going to be looking for the S&P to continue to lead. NASDAQ showing signs of losing momentum. All right, so be very cautious this week. Like I said, it is the week before OPEX. We did potentially double top here without MACD. That doesn't concern me until we break trend. So if we come back and close inside this cloud, I'll be defensive, and I'll be looking to see if the Dow Jones can get some more rotation into the industrials. And obviously XLF, the banks, those are what I'm going to be really focusing on this week and into the end of the month. All right, hope that was valuable for you guys. Make sure you hit that like and subscribe. I'll see you on the open. Take care.